This time I'm interviewing Taavet from TransferWise, and I have to apologize if I sound a bit like an ad, but TransferWise is a great company. I say that because it made my life a lot easier. I moved to the UK a few years ago, and I need to send money back to India occasionally, where I'm from. And it was a nightmare. I even had to open a brand new bank account, and then my banks wouldn't tell me what account to send the money to. And then Taavet invented TransferWise, and now I do it every month with absolutely no problem. So Taavet, come on stage and tell us what TransferWise is.
Hey.
Welcome.
Thank you.
So do you want to very quickly tell everybody what it is that you do? And then we can jump right in.
Totally, sure. So TransferWise is a little online service which helps people and companies make international payments. So it's kind of a very mundane thing we're doing. You know, people used to do it in a bank, but banks are known for Western Union or sometimes PayPal. But these companies are all known for offering a really poor service. So overcharging for something which is complicated to use. So we just made it simpler, faster, better, and consumers seem to love it.
Mm-hmm. You are transmitting, what, £500 million a month now?
Yes, so translating it for the local audience, 700 million euros on a monthly basis.
Right.
And that's really the starting point.
Remember, Taavet, look at the audience, and clearer and louder.
Yes.
So
less mumbling.
Less mumbling. Okay, so the theme of our chat today is going to be fintech. And one of the things about fintech is that fintech it's kind of like nuclear fusion. It's been the next big thing for a long, long time, but hasn't actually become a big thing yet. I'm trying to figure out why this is, because we've seen the music industry get battered. I can tell you that news is not taken too well to this whole internet business. Video is getting unbundled at the moment. But finance and banks, they soldier on. Nothing seems to hurt them, not even the crisis of 2008. Why is this? What is protecting banks?
So I think it has to do with a number of things. I mean, first of all, finance is kind of hard. You're dealing with people's money, so there's a certain element of trust associated with it. And also I think there's a perception that we all believe that banks are looking after us. We all believe that the bank I went to when I was 18 and opened up my first account. We thought, so good guys. I'm going to go to them when I need a mortgage. I will go to them for all the services that I want. Yet, it kind of happens that with the global financial crisis in 2008, we learned that maybe banks weren't looking after us that much at all. So
right.
we kind of learned that it's actually much more about greed. It's really about looking after themselves, not looking after us. And I think that also then the loss of trust coincided with, let's call it, digital disruption of various services. So consumers had been getting used to cheaper, faster, better in a number of industries. So in telecommunication, we would use Skype instead of our local phone company. We would...
Taavet is too modest to tell you that is where he comes from. It's what he was doing before TransferWise.
Yeah, I was very lucky to be part of the teams that built Skype, and so a great experience of taking a company from an idea on the back of a napkin to the first few 100 million customers. But really, consumers started using Skype, started using Spotify, started using other modern online services, which are all much better than their kind of old incumbent version. And then, you've lost trust in your bank, and you think, bloody hell, I know everything else that I use is so much easier. Kind of, this moment of a perfect storm happening where you see that banks aren't serving you well, you see that things can be done better, and
right.
And at the same time also entrepreneurs became feeling more comfortable with dealing with regulated industries. So financial services are regulated.
Yeah.
That's a good thing. But it's a bit more complicated than starting an online dating service. So we just need to put a bit more effort into it, and I think entrepreneurs have now gotten used to the idea that regulators are part of the ecosystem, and it's a necessary evil, so to say.
And they will be no matter what you're doing. I mean, you may not enter a regulated industry, but sooner or later your industry will become regulated.
Well, hopefully not. I think
as Ms. Vestager will tell you.
I think also it's really good to see that regulators around the world are actually thinking a lot about innovation. So what kind of used to happen is that it used to be that the incumbents were the ones who were speaking mostly to regulators, because young companies didn't see this as being a fruitful use of their time. But now we're starting to see that entrepreneurs are feeling much easier about and much better about talking to regulators, and regulators are thinking much more about how do they use policies to foster innovation. So if you look at the financial regulator in the UK, the FCA, they're awesome. They're one of the most forward-looking and progressive regulators around the world.
Right.
They were the first to set up Project Innovate, which is meant to help startups through regulation. Now there's Project Sandbox, and that's stuff which regulators are copying all around the world, Singapore, etc. So, I think the attitude of regulators is changing, which is helpful.
So you paint quite a rosy picture, Taavet. With that as the background, what do you think have been the big successes in fintech? Don't say TransferWise.
So if we look at kind of all the verticals of financial services, I think in every vertical you can find one or multiple tech companies who are doing an amazing job. We're still at the early days. It's the first inning of who knows how many.
Is this a cricket innings or a baseball innings?
We'll leave that for the audience to vote on. But it's really, we look at lending and we can see there is Funding Circle doing an amazing job in the UK. There is SoFi doing a great job in the US. We look at asset management. There is Wealthfront, Betterment, Nutmeg. A dozen companies who are all getting to a point where they're having decent traction. Then we look at payments, and we have Square, we have Stripe. So in every vertical we have a tech company who is doing a much better job than the bank. So I think we do see lots of success stories already. So they're all at the beginning, but we're talking about the humongous market.
Right.
I will mention TransferWise for a second. So in money transfer, we're doing a decent job. We have 5% market share in UK now. I think that's kind of a pretty good testament that what we're doing is working.
Right. Which areas? So you mentioned asset management, transfers, loans, peer-to-peer loans. These are the areas you're saying that we're already seeing some early successes. Which areas do you think are yet to develop? Which are the ones that banks can rely on for a long, long time for nobody to come and shake things up?
I don't think there is anything where banks can really enjoy a long, long time. But if we look around, and also we're starting to see people take on more longer term and slightly more complex areas like mortgages. But I think if we look at banks, and the one thing where banks have an advantage is still keeping your money.
Right.
So that's something where no tech company has a better solution. A lot of it has to do with regulation and deposit insurance, but keeping your money is something which maybe it's going to be for banks for a long time.
Right.
And I think the other one, which I think is a complicated one, is a business of offering a current account service. Because I think over time banks are getting to a pretty good place with current account. Also, current accounts, because they're subsidized, are often free. So I think it's challenging to find a way. But we have a lot of companies trying it. So I'm sure we'll see a bunch of them succeed. But I think that's a hard one to come up with a product which is 10 times better than the banks.
But mortgages, you're saying people already trying to get into.
Yeah, you can see in UK there are a couple digital mortgage brokers who are taking care of the whole process, making it easier for people to understand what they are getting into. In the US, I believe Lending Home Corporation is one which is offering mortgages. So we're starting to see that tech companies are looking at more and more sectors in finance and seeing how to provide a better service.
So let's say TransferWise is chugging along nicely and you don't need to be there every day. If you were starting a new fintech company today, which area would you look at?
It's really, I think all that I mentioned are still areas where there is so much to do. When I would think about doing something new, which by the way I'm not, but it's about thinking which is a huge business. So where do you have a big market? So if I go think back to Skype, telecommunication and phone calls is a sufficiently large market to build a company or dozen of them. Same with money transfer. It's a big enough market. And the other thing which you need to think about is how do you offer it in a way which is 10 times better than the way the incumbents are offering. So if you get these two things to match up, then maybe the exact vertical is slightly less important.
Right.
And I think also when we talk about lending or asset management, there is room in all of these for many companies because they're such humongous markets.
Do you think, you said earlier, most of us don't think too much about our bank accounts or about the banks we deal with. Do you think banks are responding to all of this in a good way? Do you think banks are getting better?
In a way, they slowly are, but it's hard to see big steps. The challenge with banks is quite simple. Being attacked in every vertical you're in means you really need to think about re-engineering everything you're doing. So if as a bank you used to be focused on your branch network, people would just come to you, they would go through whatever pains you had in the sign-up process. So now you have to think about how do we go from a collection of branches, how do we go from that to offering an online service on your mobile 24/7?
Right.
So going through a digital transformation is painful, That means banks will need to lose lots of jobs. They need to rebuild all of their systems, and they need to do this in a way that they become competitive with the tech companies. They become equally nimble, equally fast, charging an equally low price point. So besides all of that, you're going to have to drop your revenues by a factor of 5 or 10.
Right.
So that's a pretty hard transition to go through.
So they're doing a dozen things at the same time. So something interesting about banks that somebody I once interviewed told me, and it might be you, it might be someone else, I forget who, is that the single greatest factor in deciding what bank to bank with, even today in the 2010s, remains proximity to your house. Even though you will never go into the branch, there's no reason for anybody to go into a bank branch anymore. That still remains the single most important thing. Which bank is closest to my house? How is that something that any fintech company can challenge?
The closest bank is the one which has the best mobile app on my phone.
Well, that's once you have your account, right? Well, for some reason, there's this security in knowing you can go down the road or go into the center of your village.
So I think that's changing, and it's changing starting with the millennial generation.
Okay.
So I think the millennials and people around them, they are growing up without having that attachment to the local bank. They are much more likely to switch their bank. And they'll do it very, very quickly compared to people who've been banking with the same bank for 40 years. There is a saying that you're more likely to get divorced or change your husband or wife than you are to change your bank.
Right.
I think we're seeing that changing. Also, as the process of onboarding customers and going through the account opening becomes easier, which some people are now doing on a mobile, you take a selfie, you take a photo of your passport, that all makes it more easier, and we'll see that becoming a much more mainstream behavior.
So let's talk about TransferWise for a minute. Well, not about TransferWise, but about the industry, really. And so when you started TransferWise, one of the big things was, this it's entirely free of banks, it's peer-to-peer and so on. TransferWise is now 5 years old. You've learned a lot, you've changed a few things. You offer, 450 routes or something like that?
More than 500 now.
More than 500 routes, which is to say currency can go from X country to Y country, or from Y country to X country. That's 2 routes separately. In the past 5 years, what have you learned? What's been easier? What's been harder than you expected?
So a couple things. I think what's been easy in a way is that people want better financial services. When we launched TransferWise 5 years ago, we basically got the service ready, we put it up on the web, and 15 minutes later the first customer gave to us and gave us £2,000, said we want it in euros. We didn't expect that to happen so quickly, and it was a little bit of a moment of, oh shit, what are we going to do now? So in some sense, people are out there looking for better financial services. So that's a good thing. The hard thing is that you do have the trust barrier to overcome. there's only so many people who are willing to trust you if you're a company which appears on the internet started by two Estonian guys. So you have to kind of continue building your trust, building your brand, and that's a very hard thing to do at the same time. Then what's hard is that the financial system, the banking system, which we are all a part of, is very non-tech friendly. Banks don't have APIs, so you have to go and invent a lot of these things, and banks aren't very excited about working with fintech companies. Even though when we work with them, we pay them fees and so on, but they aren't. The attitude is very different. It's not about move fast and break things. It's really about how can we do it as slow as possible, so we all collectively feel good about it. Another thing which is hard is transparency. So, one of the core reasons that me and my co-founder Christo that we built TransferWise has to do with the fact that banks were lying to us.
They were lying to. Oh, you mean
so
when fees?
When we're making an international transfer, banks never tell you how much is a markup on the exchange rate. That's what really got us upset. And that's something which is still the dominant behavior. You don't know how much is the markup on the exchange rate. You don't know how much asset manager is being paid back by the funds they invest in. I would call it almost a systemic issue. So changing the thinking around transparency is also hard. And we're doing as much as we can to bring more transparency in our vertical and also then in other ones.
But there's another side to transparency as well, right? Which is in terms of regulation that we were discussing earlier. Now, as a company that moves money around in from one part of the world to another, you need to know that you're not facilitating money laundering, for example. And so you need to work with the banks. You need to work with existing risk companies and security companies. How does all of that work? And how have you sort of negotiated that? Because on the one hand, you say your marketing says, banks are lying to us. On the other hand, you have to go to them and work with them and build relationships.
So, on one side, we're starting to see the emergence of, let's call them suppliers in the fintech ecosystem, specialist companies who are doing whether it's KYC, background checking, or offering services that all fintech companies need.
Right.
So I think that's exciting, and these companies are built for fintech businesses.
So these are non-banks. These are sort of independent companies.
Non-banks, yes.
Right.
Now, if you go to banks, then there's actually I think there's a pretty simple way of looking at it. Let's take HSBC. HSBC earned $800 million of revenue on money transfer last year. So obviously, we're going after that, and we'll be making sure that the figure keeps dropping every year from now.
Right.
But then the choice that they can make is okay. There's TransferWise attacking money transfer, or we can take any vertical. So they can either block us, or they could work with us, and then we would work with HSBC to actually use them to receive money, to make payments, and we'd be paying them for it.
Right.
So a smart bank will figure out that, okay, I'm rather going to be a part of the fintech ecosystem, and I'm going to become a service provider there, so at least I get something back, because I'm going to be disrupted anyways.
Right.
So, and there are so many banks that even if some banks are more stubborn, there's going to be another bank who thinks, hey, that's actually a business opportunity for me. I'm going to be building out my wholesale business to work with the likes of TransferWise and so on. So I think smarter banks are figuring this out.
Right.
And we're also seeing the regulators helping to make sure that access to payment networks is being done in a way which is fair to everyone and so on. So
you published this. We're running out of time, so I'm gonna rush through my last 2 or 3 questions. But you published this amazing number in a report earlier this year, which said that consumer-to-consumer payment revenues are 8% of all global payment industry revenues. But consumer-to-consumer transaction volumes are 0.01%, which is pretty staggering. So when you're going after something like that, I'm amazed that these guys are still willing to work with you, because you're really sort of hacking into their margins. So anyway, earlier I was chatting with Peter from Adyen here before lunch, and a lot of what we discussed was how he makes life simpler for merchants, also for consumers, but the consumers don't necessarily see it. But with what you're doing, with what a lot of the companies that we've talked about are doing, it is directly aimed at consumers, and I can see as a consumer how my life is easier. the question is, why don't consumers then, having seen that this is possible, demand better services from their banks? Why doesn't that drive innovation?
I think we really need to get maybe next year we can get a bank CEO sitting next to here, and we can have an honest conversation about this. I believe consumers are demanding it, and I believe it's very hard for banks to offer it. It's hard to offer because they have to go through a digital transformation to be able to do it, but they can't do it in a very quick speed, because otherwise they would be losing some revenues too quickly. So it's really kind of a question of figuring out how do you re-engineer your processes quicker than the speed at which you're forced to be cutting your prices. So I think that's why. But we are seeing banks make progress. If you look at some of the larger banks, their mobile apps are becoming good. So I think we are seeing progress. It's slower than we want it to be, but we're seeing it.
Or wouldn't you prefer it was slower? I mean, isn't it better for you if the banks are slower than consumers would like?
In the end of the day, what we care about most is consumers, and that consumers have better services. So, I do believe that whether it's TransferWise or any other company in fintech, we are the agents of change in the system. So we're forcing everyone else in the system to change as well. So in that sense, our mission is to give people a better way to make payments. So they'll be doing this using TransferWise and many other services.
Right. So there's also a flip side to that question, which is maybe consumers don't like change. We all have ways of doing things, especially when it comes to something important like some guy to whom we're giving all of our money and trusting with a 30-year mortgage, or expecting them to move money across countries. And consumers, as we've seen in the US, for example, where they introduced chip and pin, which we're all used to in Europe, but the Americans are really, really unhappy about this and seem to think it's the worst idea ever, even though it's better security. Is there an argument to be made that perhaps consumers are just not that keen on change?
I agree with you. I think consumers do not like change. It takes them time to get used to it. But once they see how it's better, I think they're quick to embrace it. I'll use an example from my parents who are 70 now. 10 years ago, I introduced them to Skype. So they've been using a computer for the past 20 years. So you can call them late adopters when they started using a computer when they were 50. But using Skype was somewhat confusing at first and so on. But when they realize actually it's such a better way to communicate, they're pretty quick to adopt it. So I think this goes for everyone. If you're changing your bank, of course it's a pain in the backside to go through this at first, and you will put it off for a while. But once you're done with it, you kind of think, why didn't I do it earlier? And I think that's this is about change in general, nothing to do with fintech or any or tech. I think overall consumers do not like change, and it's fair enough. We all have a million things to worry about. So it's not really for most of us, it's not really something to look forward that you have to go through another hassle of changing something.
Right, and we're nearly out of time, so I'm going to skip directly to a last question, Taavet. So you said, we were talking earlier about the different verticals, and you said in each of them, every company you named, you said it's still very early days for the industry as a whole. Can you paint for me a picture of what this world looks like when it stops being early days? Do we all use a different service for everything and have to figure out which one is the best? Do all of these then get subsumed into some kind of umbrella corporation? Maybe you could call it a bank. Or do banks just start buying up these companies? What does this world look like in 10 years or 15 years?
So what we know is that in 10 years' time, a large chunk of financial services will be provided by tech companies. I'll give 2 data points for it. One is that Skype, that is now about a dozen years old, owns 40% of long-distance calling. So we've seen similar change in other industries. The other one is that when we did our Future of Finance report, 20% of consumers expect to be using tech companies for all of their financial needs. So that also means that at least 20% of financial services will be offered by tech companies. So I think that's kind of the inevitable part, and we'll see that the industry won't become 20 or 40% bigger, but rather that's going to be taken away from existing players. So some of the banks won't make it. The exact configuration of how much unbundling, rebundling will happen, I don't know. I don't think, different people have different views, but I think we'll see a lot of different experiments. We're seeing lots of unbundling happening now. We're starting to see some rebundling. So we are working together with different banks, for example, to offer their customers TransferWise money transfer. So we're rebundling things.
Okay.
So I think we'll see various formats happen. It'll probably depend a little bit on the countries and regulation, and we'll see different results. But it will be a combination of using vertical specialists and then various mashups between them. I don't know the answer yet.
All right, cool. Taavet, as you can see with that big red sign over there, time is up. But thank you very much. That was a very interesting conversation. Thank you for not leaving.